This conference will now be recorded.
For those of you logging in now, if you haven't read it already last week, please just remind yourself of the confidentiality notice and the disclaimer. Also, please don't forget to like, comment, and subscribe to Market Making Strategies. We're on YouTube, Instagram, LinkedIn, Discord, whatever have you. In order to deliver our community with more free content, we greatly appreciate your support and feedback. It really does help us. A lot of time is put into these courses and putting everything together to help everyone learn our strategy. So this is just a little that we ask from you lot. Thank you. Morning, Trevor. So this is the second week now of our option strategy course. 3 more classes to go. It's Tuesday, still early on in the week. Everybody type in how are we feeling this week? How are we feeling today? Are you all enjoying what you learnt last week and ready for the second half to complete your understanding of the option strategy? Brilliant. Are you guys seeing how some of the strategies are already starting to make their moves and starting to show more promise? Instance, who can tell me which one right now is starting to validate all the buy-in? ACHR. Do we also notice how this becomes long-term as opposed to short-term and mid-term? So before I continue to the last part, I definitely want to recap an understanding of why ACHR, again, would be considered long-term. Clearly, one of the reasons we've seen is ridiculous amounts of acquiring continually on a weekly basis. We know that when they're acquiring to that magnitude, they're acquiring for the future and the potential future of the stock. But along the way, as the acquiring comes in, as the interest deepens, clearly we're going to start expecting resulting news and so forth that will help this incrementally start moving towards an area where we start seeing development and production and contracts will start being initiated. And these are all the factors and future that all these investors are seeing. Hence, you're seeing such massive positions. But again, now today, news just came out. How important, if you're looking at a long-term position like ACHR, would news be? I'd assume it would be rather important, correct? So if we were to look right now, I'm going to quickly share something before we continue. So, Archer receives FAA certification to launch its pilot training academy. Now, I've read this morning, and there's 4 levels or certifications that need to be cleared. They have now cleared 3 with 1 more pending, which they've already completed the application. But at this stage, they are now allowed to start training the pilots required for the electric auto taxis. That obviously is important news. And a lot of the buying that we're seeing and did see is all understandings of those who believe that this was going to come and that these steps and milestones were going to be made. And when you start looking at certain situations like that, that is why we start seeing buying like this. What have we seen all day long today in ACHR? And now this would be at higher levels. Very important. Because if you look, for the most part, we've been seeing all the buying accumulating between 9 and 10.50. Were you all watching in how that's been accumulating? Now we're looking at this, and I know we've talked about this, but one thing that we have noticed is that since December, there's been nothing but buying in this since 9 and 10. Now, with that certification being approved, not only have we seen in the last week the volume coming back out a little bit of this valley, but we're seeing the buying at higher levels. What do you think that starts to mean when phase two? So, for those who day trade, I'm now going to teach those who don't. When we day trade, for instance, if this was a day chart, this would be looked at phase one, as in this is the time that they're going to keep buying up exceptionally, take it to a certain point, 12, after which they go into what we call phase two. Phase two of a strategy on a daily basis would be them acquiring a massive amount of shares underneath the point at which they place their first controlling prints would be 12. And we know we've seen a huge amount of controlling prints that came in right in the beginning of January at 12. I was watching it myself that day. I was here trading and I saw the massive amounts of buying at 12, after which we also saw nothing but buying here. And then it went to phase two, a little bit lower volume, and just acquired for weeks on end. Now we're starting to see that the volume is coming back in and the buying is getting higher. So now, as Davis says, activity is ramping up due to deadlines for catalysts. Yeah, somewhat, but this isn't going to be one of those that is going to happen tomorrow, next week. They're basically putting all the pieces in play for what we should start seeing towards the end of the year. Once all these certifications come in, once all these approvals come in, more contracts coming in. But in the end, everybody is purchasing and buying massive amounts of shares for the future prospect of this company. As we spoke on last week, this is how most of your major companies start. The real moves happen after you get the big contracts. And after the big contracts start happening, you start getting production. After production, it's revenue. Just like any business, it has to start somewhere. It starts by you build a business. A business does not come into fruition overnight. Most businesses can take up to 10, 12, 15 years to really see the highest level of potential because you've got so many things you've got to get through in any form of business. So this one is nice, and obviously I'm really hoping for the sake of classes, which would be nice that we do see this get to 12 and so forth, and we're able to witness this movement within our classes. But with that being said, we're now going to go back to today's class. Okay, so the reason I kind of introed into that ACHR and speaking about news and speaking about the company is because a major important part of when you're swinging stocks is quite simply understanding the company. And the reason you need to know the company is when you are in a position, and although we might have seen massive amounts of buying, and we know that that massive buying is typically due to a huge amount of investors and a huge amount of institutions having a firm belief in what the potential of that company is. There's still a huge room for that to change when the economy or when competition comes into play and so forth. And that can affect the short term. Most typically, it will affect the short term standing of a company and price, as we saw in which company? Which company a few months ago had everything going for it, all the buying, all the movement, had massive amounts of buying at 30. And I mean, it was about 5 to 6 million shares purchased at 30. And then some news came out. Who remembers what company in news? There you go, Kevin. Hims. Hims came out, nothing but buying at 30. And literally the next day, what was the news that came out that thwarted their movement and stopped it for a while? We obviously know Amazon came out and said they're going to be a competitor. They're going to be also introducing GLP-1 meds for weight loss, something that Hims is big on, something that we know that everybody's big on in the industry, in the economy right now, that people are using these GLP-1 weight loss drugs. You might have heard of them. Um, Manjaro and Ozempic. I'm sure you've all heard of it. But that was very short term because at the end of the day, it's a huge marketplace. Amazon's not going to eat up everything. There's enough room for everyone. But what did that do, Kevin? If you still believed, as you should, that the people that bought 5 to 7 million shares at $30, so if they bought 5 million shares at $30, how much money did they put on the line there? How much have they invested? $30, 5 million shares. How much money did someone invest? 150 million. Let me ask you a common sense question, a theme that I go back to. Do you really believe that a company, let's just put it as a company to make it easy, or an institution, who placed $150 million at 30 didn't account for the fact that Amazon could be a potential competitor, especially in that space? Do you think that they would never have accounted for that? So if you believe, which I 100% did then and do now, what do you think they would use that news to do? Isn't that a perfect storm that they buy at 30 and the next day it gets battered down, all selling, and who remembers exactly where it went down to? Because I remember to the T. It's like it's replaying in my head right now. It went down to 21.22. So from 30 down to 22 and back to 30, did that allow them and others to build a massive position on all the retail fear? Absolutely it did. And where is Hims today? What's the price point? Let's put it at 60, and to make it easier. So if they invested, and forget about all the build they did under 30, but let's just take that amount in itself. 150 million invested at $30. How much did they make, and what was their return in percentage? Give me the dollar and give me the percentage. So far, not a bad deal, is it? In a few months, to double your money and make another $150 million. So the point being is we need to know and have a good general understanding of the company. So when we see certain situations like that, the one thing that we want to have in our back pocket is a complete understanding of the company. So we have confidence in what we know about the company. Now, how many times are there companies that make a run with great buying, but really they don't have the strength in the company to support these prices, don't have the products and services that can be top one or two or three in their segment, but right now are just riding a wave and we know quickly that this is going to end soon? Who's seen companies like that? Peton, absolutely. Did nothing, and then we get into lockdown and everybody's at home. Blue Apron, if some of you remember, another company. But now, if you've got companies that are getting pullbacks like Hims, which have been around for a long time, which have great logistics, are known, have a great brand. We all know Hims. They know when they're getting into this, they knew when they scaled, they knew when they grew to the size they were, that Amazon absolutely would be a competitor of them. But as we know, Amazon's definitely will eat up a lot of market share, but there's more than enough market for other players too. So let's go straight into this, the 7 point company analysis. Understanding is required in order to effectively manage any micro or macroeconomic or sector headwinds that could impact price target. Leadership. Know the founders and C-suite strengths, quality, and experience. We're going to go into each one, but when we refer to C-suite, we're talking about CEO, COO, so the Chief Executive Officer, the Chief Operating Officer, the Chief Finance Officer, the Chief Marketing Officer. That's called C-suite. That's your top suite of admin that are basically running the company. It's important to know who are those players. We need to know who that is. If you're looking at a company called Berkshire Hathaway, who's their CEO? Which has changed now recently because he put Dan in there. But who was forever the CEO of Berkshire Hathaway? Buffett. Now, is Buffett someone that you would trust? Exactly. So the reality is you got to know who's running the company. Why is it important to know the strength of the C-suite? Because depending upon their history, depending upon their experience, they've most likely seen either in the same company or other companies a lot of tailwinds and headwinds and so forth, and found ways to maneuver around them and learnt their lessons. And the chances of them applying the same mistakes are a lot less. So having C-suite strength is very, very important. Number two, products or services. Understanding exactly what the company provides and or product or service and runway to new future offerings. So what are they currently doing? What is the product or the service that they currently have? Or, and when it comes to that current product lineup or service lineup, how do they stand among their competitors? So if we were looking at the most obvious right now and we wanted to talk about their current products in regards to competition in their space and future runway, what about Nvidia? Do you think Nvidia's chips are winning against their competition currently? And what chips are they building or have built that are already starting to say are going to be the best chips? Or a lot of people are saying they will be leading the way moving forward in what? AI. So understanding not only where they stand among their competition currently, but you need to know what are they developing for the future and how will that stand up against competition? Because a lot of times, and Donna knows this really well, more than most of us, for years, certain companies like the IBMs of the world and so forth were leading the way. And then they got beaten by chips like NVIDIA coming online, TMC, and what have you. So understanding the now and the fall and the future is very, very important. Market share. Where do they stand among their competitors in regards to market share, reputation, customer feedback, and branding? So, as much as you may love Rivian, who's the leader? Who's the one that has the branding, the reputation, the CEO? I didn't even need to say anything, did I? Look how quickly you all type Tesla. Do you even consider other electric automakers when your mind goes into that space? Or is it just Elon and Tesla. You don't. Do you think it's going to be easy to unseat someone like Elon? Is it going to be easy to displace his branding, to displace the quality of their cars, the technology? What do you think is hard to beat Tesla at currently? Is it the fact that they have a lovely vehicle, or is it the fact of the branding, especially with Elon, but the technology? Is Tesla a car company, or are they hard to beat because of their tech? What would you say? Every one of you just said tech. So then ask yourself, did he win because of the car, or did he win because of the way he branded himself into our minds, into economy, into the ecosystem? And did he create the technology that we love more than the car? And the reality is, it's the technology. So if you like both of them, are you going to sit there and place your investment currently in Tesla, or would it be Rivian or one of those other automakers that are electric? You're going to put it in Tesla. Now, the next part, financials. You've got to have a quick understanding of their financial health and their financial outlook. I'll give you an example really quickly. Well, we go into it in financials. I have a nice detailed example there. And lastly, headwinds, tailwinds, redress, impactful events that could change the trajectory of a company. So, 7 point company analysis. Leadership. Know the founders and C-suite strengths, quality, and experience. The first and most important aspect of any company is the leadership. Great ideas have failed due to poor leadership. And so then execution and many subpar ideas have experienced success due to great leadership who have improved the product while painting greater service and protocols. And the stock market is no different, as these are physical companies in the end. And so we must be sure to create simple understandings in the following. So a lot of times and in a lot of areas, you've all noticed there's been some absolutely great ideas that just never came to fruition, never really made it. And that's because of the C-suite, the leadership, poor execution. But how many times have you guys witnessed a product and said, I can't even believe, or a service, that this has actually made it and become a $1 billion company? How many times have you guys witnessed that and said, my word, it wasn't the greatest idea in any way. Maybe it filled a void, but the execution was just perfect. It was time perfect. All the everything was considered. I wouldn't say Piton. I wouldn't say Piton. Piton, I would not ever say it was the execution. Piton just had a what? Who's ever heard of a black swan event? Who's heard of a black swan event? A black swan event is something that happens once in a lifetime, something that's so unexpected. Would you guys call lockdown, or whatever you lot want to call it, COVID or what have you, a black swan event? Has that ever happened in our lifetime? That's a black swan event. So black swan event caters sometimes to companies that would never have made it to the level they did anyway, and that's what Piton experienced. But I'll tell you a company which shocks me every time. It was the most simplest idea that completely was executed with perfection. Who's heard of liquid death? Have you heard of the water can company called Liquid Death? Liquid Death is now a billion-plus company. What is Liquid Death? It's this rock star looking can that has water. That is all it is absolutely water in a can. And how did they really start branding this? Quite simply, they were saying when you go to these massive events, conferences, what have you, outdoor festivals, the one thing that was lacking, and a lot of people were seeing, is that all the water was in bottles, plastic. And a lot of people were like, right, we just want to kind of participate and look like we are drinking when we're not, and what have you, and rather use cans, easier to do this, do that. Anyways, long story short, the marketing efforts was executed to perfection, and look where liquid death is today. So understanding how important leadership is key, because at the end of the day, great ideas die with poor execution. So founders, what success have they achieved? Lessons learned and proven, adaptation to market changes, and what is their reputation among their peers, and how does the addressable market confide in them, if any? C suite. Who, not how. Has anybody ever read Who, Not How by Dr. Benjamin Hardy and Dan Sullivan? Dan Sullivan being one of the greatest entrepreneurial strategic coaches ever. Been doing it for 57 years. He came up with the concept of who, not how, which means for companies to truly grow, to truly be at the maximum optimized strength, one man, so for instance, the CEO, the owner, cannot try to figure out how to do everything to make the company successful. That ultimately means they bought themselves a job. The who, not how basically means find the person who is most able, qualified to complete the task needed to the highest level. You find the right person, not try to figure out how to do it yourself. Does that make sense? So when you look at the C suite of a company and each of the leadership within the C suite is of top standard, how do you think the chances of that company overall fare? And that basically means not only stabilizing, accelerating, scaling, but being able to manage tough times. That's the key, isn't it? Do all companies at some point, some stage, face tough times? Is it always due to their own weakness, or can it also be due to factors they do not have control over? There's a lot of external factors. Right now, when the housing crash happened in 2008, I know on a personal basis because that's when I purchased my first hotel on my own with business partners, and I wasn't even 25 years old. How do you think that experience went for Doug? Someone give me a better answer. Thank you, Davis. You must have learnt more in that time than you could have ever asked for. That's the answer that I love. Yes, of course it was painful. We know that. I bought a hotel in the housing crash, the start of it. And for those of you old enough to know, I'll even give you the date. July 2018, the 8th of July 2018 is when I closed on that hotel. I'm sorry, 2008. July 2008. That was 3 weeks before the officially market crash, housing crash happened. Now, I am at that point, been in the hotel industry for a long time, have hotels up and down the same area of that hotel that I purchased, means nothing. Because when the housing crash happened, no matter who you were, no matter how great you were in your business, You had to accept that this is now going to be a challenging period no matter what. So when you have the right leadership, the right people with the right experience, they can navigate through those tough times. If it wasn't me, now let me ask you all something. Do you think I lost that property? Do you think I lost the hotel? Do you think I made any money in that hotel? Wrong. I did one thing and one thing only. And because I am from a hotel background, because I understand the nuances of hotels, because I'm willing to work hard, I made zero money, not one penny over 6 years of owning that hotel. But when I sold it for the exact dollar amount I purchased it for, $4.2 million. I bought it for in 2008. 6 years later, I sold it for $4.2 million. I did not make one penny. I did lose a little bit of time, but in the end, as Davis said, I learned a lot. Now, if it wasn't me and it was someone who's never ever been in business, never owned a hotel, do you think they could hold that hotel for 6 years? Exactly. So your leadership is extremely important, not only for how far and how much they can scale a company, but just as we do, and we have to make sure when we're trading that we are first controlling our risk. When we look at any company you want to invest in, whether that's short term, mid term, long term, you have to know not only how great can the company get to, but when tough times come, do they have the right people in place to be able to hold it? Does that make sense? So companies are built on the backs of having a strong and astute CEO, CFO, COO, etc., who can implement the right protocols and procedures while navigating through changing climates, puzzles, and endure the moments to then scale the proof of concept and help improve the overall sentiment and subsequent stock price. Leadership. So this is just me putting a bunch of points out there. You don't have to use all of these, but these are things that you should be thinking about. Do not go too much into detail. At the end of the day, what's the highest percentage follow that we do here? Why are we technically in these stocks? So if we look at my strategy, option strategy based off prints, we're following smart money. So what is the assumption that we have made already? What's the assumption you make straight away when you're following smart money? That they have done what that you can't do. They have resources that we absolutely do not have. They have teams, and on top of that, the amount of money that they put on the line just validates the amount of belief they have in their position. But you're not the fool for knowing more. You become a bit wiser, and it doesn't hurt to do this and do the 7 point company analysis. So leadership, know the founders of C-suite strengths, quality, and experience. Research the founders and leadership to see if they have prevailed or have critical experience from their last companies. How did they navigate challenges? Are they informed and experienced in the current sector? How many times have you guys witnessed CEOs coming from a whole different sector, taking over a position of a company? And I'm talking about major companies in the stock market, and it hasn't worked out at all. Starbucks, they had CEOs coming in from all different types of industries. Never worked out, kept getting hit. Who came right back? Their founder. Disney, perfect example, Davis. Thank you. That was an absolutely wonderful example. What about this company called Peach? No, it's not called Peach, Davis. What's it called? Pear? Forgot the name. Oh, Apple. Apple. Who did they have to bring back, even though they fired him? The man who founded the company, they fired him and they had to bring him back. They brought Steve Jobs back. So knowing that is very important. Now, let me ask you, and I'm going to stick with you, Davis, for a second. If it was Nvidia and a microchip company, and they decided to get the CEO of hotels.com, and you're in a active position, you're really doing well in your options. I'm just going to make a number up for you. You're up 200%. You have 3 more months to go before your contract end date. And then you find out some news comes out. But prior to this news, Davis, you're watching this stock on a daily. You're watching, we're just making this up, Nvidia. You've been watching Nvidia, obviously, and there's nothing but buy all the time. Then suddenly, Davis, you start seeing all these big sell prints, big sell spurts. And like, okay, this isn't making any sense. We had nothing but buying, and now I'm seeing some huge selling, lack of volume. And then news comes out, Davis, that Mr. ABC from hotels.com is now going to be the new CEO of Nvidia. What are you doing? And what gives you more faith in what you're doing? Just giving Davis a few seconds to type. Okay, I try to give you a few seconds there, Davis. Here we are. If I have less than 4 months, I'm probably adjusting for a chance to add more midterm, long term strategy. Absolutely. But does it take away knowing that those are selling, right? Because at the end of the day, why from buying does it turn to people now getting out of positions? And by the way, when I talk about people, I'm only talking about smart money. So let's say when you start seeing smart money changing their stance on it and start selling away, and then you find out that the hotels.com or someone from a completely different sector is now going to be the new CEO, do you think that the level of interest and volume will curtail while they see how good this lady or man is at the helm? Or do you think everybody's gonna be like, yeah, it should be fine, let's all just jump back in, it came down $10? No, they're not. Because the most important person coming in is the CEO. And if you're not sure of that person's ability to manage such a task, to manage such a company, not only are you getting out of your position, but you are absolutely sitting on the sideline for a while and taking note of what is going on. Is this person making the right changes? You don't know. So, for instance, going back to Apple, what was a massive change that had the stock sitting sideways for a while some years ago, quite a few years ago now at this point? Who came in? What's his name? The current CEO, Tim Cook. Who knows what position Tim Cook was with Apple? Because he was with Apple for a very long time. Does anybody know what position Tim Cook was? He was the VP of the supply chain. Sid, do you think Tim Cook had a good understanding of their product lineup? Absolutely. So again, and just sticking with you, Sid, because I know you have a nice understanding of this also. Would that be given, yes, the personality, the leadership qualities, all the obvious aspects, but would that be a good person to possibly take over, given his role, given how long he's been in Apple? And I'm sure internally they know him far more than we're ever going to know, to take over from a man like Steve Jobs. He was better, but the question still, did the market want to see what his initial moves were and track him for a bit before they found confidence in coming back into the stock. Absolutely, they did. Now, if you're in an options position and you bought, let's say, 4 months out, and you've got a month left and you're up 200%, and you see they're selling and a bit of news comes out, what are you doing when you're managing your position at this point? So if you're in a position, let's just go back to Nvidia, because we use that example. You're in a short term options position based off a lot of buying that you clearly saw. You're up about 200%. You had a 4 month timeline and you have only 4 weeks left. What are you doing with your position? You're seeing selling coming out. What are we? Type it first. If you follow my strategy, one of the things that's extremely important, what are you in your position? It begins with F. We are Prince based strategy. We're followers. So if you're seeing a bunch of selling coming out and you got 4 weeks left, and then it's back to day or 2 or 3 later with that type of news, what are you doing? Be quick. Follow them out. Thank you, Davis. Now, let's see who remembers from what I said last week. Are we getting out of 100% of our position? So if we've got 10 contracts, are we selling 10? What are we selling? We remember we only have 4 weeks left now. Time decays around there. Selling has come in. News is going to change. I just told you. Most of the time, the stock can go sideways or continue lower because of a lack of volume, a lack of interest. People on the sidelines paying attention to how this change is going to impact the company. You get out of 90%. Ask yourself 6 to 8, 7, 80. For what reason are you holding on to a low percentage position at this point? And why is it 90%? And why didn't I say 60, 70, 80? Why did I say 90? There's a simple reason why I said 90. 90% means you get out of everything. What did I tell you all last week? What is so important for you to improve in your option strategy? Thank you, Milan. You have to leave some skin in so you can learn. How? Let me explain something to you all and make note of this. Once we are out of a position completely, what are the chances that we're really going to keep paying attention the same way to that stock? What are the chances if we're completely out? Very low. If you're in that position with the wrong mindset, because if you're in there at 60 or 70%, are you truly following or are you following your own belief system at that point? Are you truly following what's happening in front of you? So the percentages, the selling, or are you following your own belief system? There you go. You're holding out for something subjective, using your own reasoning, your own beliefs. You don't want to do that. You could do that if you want to, but that would not be following this particular strategy. I want you all to have a very strong habit, consistency, and you'll get consistent results. The second you thought away from what this strategy requires, and I want you to type it one more time. What is the number one thing this print based strategy requires from you? And you cannot get away from that. You must be a disciplined follower. Please understand that clearly. This strategy is 100% based upon following the prince. Knowing all this extra information that I'm teaching you now is so that you can understand what surrounds that company to give you confidence and understanding. So as time goes on, and if certain news comes out, if competitors say that they've got a new product, you'll know how it stands and aligns with the company that you're in right now. And when you look at the prints as that news comes out, it should also align. If you're expecting one thing and the prints are saying something else, you most likely haven't dived enough into understanding the company. So, are they informed and experienced in the current sector? Did they have successful exits? Who did they work under or with? Have they led public companies? One of the things that we've seen throughout the years in the stock market is certain CEOs work great when the company's private, but a second they go and move into it as a public company, now you're completely and utterly transparent to everyone, and you're scrutinized, and you have an advisory board that can make noise, usually full of now new investors who bought shares from the IPO. A lot of these leadership mentalities and mindsets get stressed out and change. Who do they network with? How many of you look at CEOs, CFOs, what have you, and look at who's their circle of influence? Who are the people that they're with? Who do they have as friends? Who looks at that? And as you know, I'm always going to bring in some type of psychology or so forth or understandings. Who here knows what the famous thing Jim Rohn said? Who here knows what Jim Rohn was famous for saying? I bet you Davis and Derek, you both should know this. You are the average of the 5 people closest to you. Type that in the chat. You are the average of the 5 people closest to you. If Davis's friend, and he was the CEO of a massive investment company, and his good mate was SBF, who's going to feel very confident that Davis knows what he's doing? I would assume it'd be a tough one. So, understanding who they hang out with. Who here knows who's Bill Gates' really good mate? Who's he really good friends with? And he doesn't have many, but who's his really good friend? That's terrible, Derek. I will never feel confident in anything Davis does. Just to let you all know, Derek and Davis have been in part of the day trading community for a while, so they know each other well. But yes, British, you're spot on. Warren Buffett and Bill Gates. Do you think, British, that's a good mate for both Warren and Bill to have? And could you only imagine the ideas that those 2 people could share? Exactly, pretty much all right. So, who do they network with? How or are they invested in the shares of the company? One of the things I love to look for is have they sold their shares? Are they buying more shares? Are they allowing all their shares to stay even when they're worth billions of dollars? At the end of the day, let's say you're the CEO of one of these massive multi-billion-dollar companies and you haven't sold a single share, and every time you meet milestones and you get new shares as your bonus, let's just say it's been 10 years. You started off with $10 million worth of shares. Today it's $500 million worth of shares, and you haven't sold a single share. Is that the type of CEO you will have a lot more faith in? Or would you like the CEO who, once he got to $500 million, sold 400 million? And you thought that company could be 10 times higher. Thank you, Trevor. I love that answer. He's the one to go to war with. Brilliant. Love that, Trev. That's really, really nice. I like the way you said that. How are their pay packages? Whose pay package? Who knows? Elon Musk's pay package many years ago. Exactly, Kevin. Elon's pay package is that if he hits certain milestones, he'll get multi billions in payment in all types of stuff. And people would laugh at him, Kevin, because guess what he never did? Up to all that turmoil, all that burn rate, he didn't sell. They gave him what they must have believed as what when they gave him that pay package. Did they think that was an achievable target? Did they believe he could ever do what he said? Was he a multi-billionaire in shares even when the company's burn rate was ridiculous? Was he able to cash out and be a very rich multi-billionaire and allow the company to burn if it had to? Do you think, Kevin Davis, that enough people looked at that aspect and gave it the value it fucking deserved? And I'm never sorry for profanity. Unless, when it needs to be used, I shall use it. If you looked at that aspect and you dive deep a little bit more, do you think there was strength and confidence in knowing a man like that, what he did with PayPal, what he did with other companies, and had burn rate of billions of dollars and this unreachable incentive, as Davis said, completely, they expected, unachievable. He still didn't sell a single share, and he even came out once and said, I hope their checkbooks are going to be ready when I get to that stage." Isn't that a man that you either think is absolutely crazy, or just look at the fact that he never sold a share and he could have been a multi-billionaire? Somebody else. Facebook. Who knows how much Mark Zuckerberg was offered? Sorry, Mark Zuckerberg was offered by Yahoo. Who knows how much he was offered? And I'm talking when he was in the very, very, very early stages. Thank you, Kevin. 1 billion. Not only did he turn down 1 billion, Kevin, and by the way, let's be completely honest and let's have some fun. Who here would ever turn down 1 billion? I don't care how much you love your company. Type it in. All I want is a yes or a no. Would you turn down $1 billion if someone offered it to you to buy your company? We, you, me, absolutely not. We would take the $1 billion because we are money driven. The only reason someone like Zuckerberg or Elon or any of these geniuses is because they're more likely impact driven and they have a belief system that they can impact change. That has so much value. That's why understanding leadership and understanding these small nuances makes such a big impact. Products or services, current lineup of products and service, where they are deemed among their competition. So typically in all these industries, you've got your top three, usually a clear number one, and then you have two, three, four, and everybody underneath. In most segments and industries, what's the gap between one and two? The number one and the number two. Is it a small gap or is that usually a relatively larger gap? It's not a small gap, it's typically a big gap. Now, what is the difference between number two and number five? How much is that typically as a gap between them? It's not much. In sports, let's have some fun again. Name me someone who's clearly the best in their sport and number two isn't even that close. Who can name me someone that could say, this gentleman is that good or she is that good and number two is still a far distance? I knew you were going to do that, Davis, which is the Dodgers hitter, right, Davis? And if I'm not mistaken, he goes over to the Dodgers. Isn't he like the best player this year or something? Or last year? He's like the best. And if I'm not mistaken, he just got approved or okay to throw as well. Because I didn't even know that he's actually really good at throwing as well. Or not throwing, pitching. Sorry, I don't know why I talk about baseball. I don't know anything about it. But basically, you get what I mean now. So knowing where they stand in product or lineup is very important. Industry trends. Are they keeping up with future requirements? When I say about are they keeping up with future requirements, I mean, are they aware of the changes and how things advance quickly? Perfect example. Did you want to be Netflix or Blockbuster when that day came? I always use that as my reference in business. I'd rather be Netflix than Blockbuster. How much did Blockbuster, no, how much did Netflix offer Blockbuster to buy them out? Who remembers? They offered them a lot, billions. Blockbuster laughed at them. And before that, Blockbuster offered Netflix $1 million to get out of the way, and Netflix laughed at them. Or something around that, something around a silly amount. Very, very quickly, for those old enough, who remembers how fast Blockbuster went downhill, bankrupt, never seen again, and we're all about Netflix? How quickly did that happen? Who remembers looking forward to on a Friday or Saturday being young, going to Blockbuster, going to the section of the new rival, and getting excited to get a DVD and some popcorn and take it home? Do you think that they were well branded at the time? Was it a household name? Did we all know about Blockbuster? So then why did we just not want to do it no more? What was the word? Why Netflix over Blockbuster? Convenience. Convenience. Efficient. Now, do you lot want to really know how Netflix actually took away market share a lot faster from Blockbuster? It wasn't the fact of actually convenience. Let's see how deep we can go here. Who knows why Netflix ate their market share so quickly? It was unprecedented. It wasn't convenience. It wasn't. It was the late fees. Who remembers when they got a video from Blockbuster and they had it more than 3, 4, 5 days? They start charging you $1 a day or whatever it was for every day that you were late. How many of you will hold a DVD for 2 weeks, take it back, and it cost you more to give it back than what you paid for it? There you go, David. So you got another DVD when you sent back your Netflix DVD, no return fees. Believe it or not, that was one of the major reasons why they ate up market share so quick. And then it was convenience. So you've got to know those little factors. They can make all the difference. I'm going to give you one more. Many years ago, Donna's going to remember this. A few of us, as we used to do options, we'd help each other out. We'd do some research. Do you remember those days, Donna, where we would take a stock and do some research and do all of this overlay and understanding? So those years ago, I came and I said to one of them was Baba. And when I looked at the financials of Baba for a quarter, they had 1.7 billion one-time legal fee or something, a fine or what have you from the government that they had to pay off. I remember at night texting Donna that information and another gentleman who used to be part of our past community called Brett and saying and showing them that, Donna, what did we do the very next day? And obviously we saw some buying and what have you, but it was really based upon that one time event payoff. The next day, you can ask Donna, we took calls. And Baba never looked back because when the next earnings came out 3 months later, how do you think their financials looked? Because it went down on that one time payoff. But once you clear the $2 billion debt and your revenues are already brilliant, 3 months later, you're looking extremely, extremely healthy. That's why it's important to know that. Future revenue generators. What does a runway look like? How refined are the products and services? And are they deemed through the eyes of the public? Very, very important. One of the best ways, and if you look at some great entrepreneurs, great investors, the one thing they always say is, do I like it? Would I use it? Do my kids like it? Does my wife like it? Is it something that I'd rather stay with and move forward? Sometimes it just comes down to the basics. Understanding exactly what the company provides and or product or service and runway to new future offerings. Are they the leading company within their sector for the product they offer? Have they formulated a better product than that of the leader and trajectory to scale is in the horizon? Are their product or service offerings adaptable to future market changes and needs? Do they have product or services in the pipeline which could trigger future growth? Have they managed to reduce or control the associated COGS? Who knows what COGS mean? What does that stand for? Not you, Davis. Davis, by the way, is an accountant. Cost of goods. Absolutely. Cost of goods sold. Cost of goods is important, especially when we're looking at this, because if AMD, a lot of their chips are made by who? So a lot of the chips in the market, who makes a lot of the chips? It's called a foundry. What's the name of this foundry that makes a lot of these semiconductor chips? What's the name? Thank you, Kevin. Taiwan Semiconductor. They make a lot of these chips. Now, Kevin, if this quarter's report, TSM says our cost of buying the raw material has gone up by 30%. What happens to when Nvidia comes out in 3 months or so forth with their earnings report? What should we most likely be seeing? Of course it will, because that's their COGS. Their COGS are buying from TSM, who are manufacturing their semiconductor chips. So when the manufacturer's cost goes up, that means your price goes up. Increases the expenses. If it increases the expenses, especially so COGS is directly associated to the need of that product. So if your product, let's just say, for instance, Nvidia, what percentage of their revenue is probably coming from semiconductors or chips? We're all a bit slow today, aren't we? A large portion or a majority of their revenue is coming from these chips. So if these chips cost TSM 30% more to build or make, what's that going to do to the bottom line of that particular quarter we're talking about for Nvidia? It would decrease the profit margin. Will that have an impact, most likely, on the short term stock price? Absolutely. Factors very important. So, is there limitations to their offerings that could stifle future growth? And that just goes back to, are they keeping up with advancement? Are they making the product so that it will not just be good for now, but it has the ability to adapt for the future? Where do they stand among their competitors in regards to market share, reputation, customer feedback, and branding offerings? Social media, have they implemented strong market and branding to attract the largest and most dominant form, both now and the future, to encapsulate the new age method of target marketing for millennials and so forth? So, how well are they on social media? How is their presence among social networking? How's their reputation and reviews, customer feedback, branding? How strong is their brand household? So, for instance, if we go to branding and Kevin says, "Hey Doug, let's open up a franchise," and he wants to open up ABCY subs, and I say, and it's the same price and same cost outlay as opening a McDonald's. Which one should we go with without even thinking about it? You go with the branding first. How many of you have seen companies that are okay align with a great brand ambassador? So, for instance, if I had ABC Gym and I had 12 locations, we were doing decently, very well loved and respected, and then out of nowhere, The Rock becomes my business partner, what do you think is going to happen to ABC Gym? It's not going to grow, PJ. It's going to explode. As Ellie said, it's going to explode because, and I'm someone who has no social media, but I do know that one of the most followed top three or top five people in the world on social media is The Rock. If he announces his new partnership and ownership with ABC Gym in South Florida, all of a sudden, what happens to our member base? What happens to everybody walking in the doors? No matter whether it's a great gym, whether they were going to a better gym, whether their gym had a better price and better equipment, they're going to come straight to ABC Gym knowing The Rock goes there. They follow branding. You got to understand how society works now. How are the millennials? How are the new age people thinking? They go and they are excited about the brand. They follow the name, they follow the people. Quick understanding of their financial health and their financial outlook. Resources, are they well capitalized and have enough cash to sustain a burn rate if needed for now an extended period? Which company is this very important to? Which company right now are we actively looking at? Exactly, because they have no revenue. They need to make sure they're well capitalized. Most businesses fail because they're not well capitalized. How do you think leadership's decision making is when it's based around how much money they have? Are they able to make the right choices if they don't have the amount of money they require? And you can look at a small business. For any of you who've owned a small business like myself, and you've come into tough times and you don't have cash flow, Are you able to execute on the same decisions you would like to make? No, of course not. So it's very important. Profitability. Are they getting closer to break even? That's very important, especially in the stock market, on any company on the stocks. Is how close are they getting to break even? That changes everything for the trajectory of the stock price. Erroneous mistakes. Are they constantly making errors of magnitude due to rookie mistakes, or are they disciplined and earning their stripes correctly? Sometimes you're going to see there's so many mistakes companies make. Sometimes, and those mistakes do not help confidence of market makers and institutions and investors, because they're now worried of erroneous mistakes happening more frequently. Profit and loss, are revenues increasing and expenses lowering? Are COGS decreasing and product value increasing? Are ancillary services for the product or service increasing as they improve POS viability acceptance? So, for instance, if you looked at Amazon, if you looked at Apple and all these companies who have got great sales of their product, what do analysts look at mostly nowadays in their quarterlies and in their annuals? What are they listening to? What number do they want to see is increasing? The service contracts. Service contracts are the ancillary to the product. They want to know that all of that is increasing. Very important. Debt structure, understanding how they are leveraged, what their loan terms are. Sometimes they might have a balloon payment coming up. A lot of these big companies, even the ones that have hit the stock exchange, do have huge loans. So, for instance, if you're not doing well and the company's cash flow is not where it should be and they're not profitable, and in the next 60 days, you have a very sizable balloon payment coming out, and you're not hearing that they found a way to either refinance it or get someone to clear that debt and create a fresh obligation, and you are in your position, what are you starting to do just based off that and not knowing anything enough? You might start managing your position. So you got to know that as well. Lastly, impactful events. Any debt obligation maturing soon, we just spoke about. Any lawsuits ongoing. Some of these companies are in some of the most largest lawsuits that continue on. And which sector typically deals with large lawsuits? Which sector? Pharma. Thank you, Alex. Pharma. Always dealing with some form of large lawsuit. And a lot of times we see when they've got through the lawsuit, they start to prevail because it says a lot about the dignity of a company as well. Any future concerns that could affect the company? Is there any possible issues moving forward that could come? Are other segments or industries seeing a shift that could positively impact the revenues or possibilities in the near or long term? So that's just some basics. Well, not basics, a good deep dive of the 7 point company analysis that you should all do. Now, what we've done, and you'll see on Thursdays, I've completed a case study and completed a 7 point analysis of one of the stocks that we've been looking at. So you guys can see how it's filled out. Now, we have 15 minutes left. Do you have questions for me? Okay, I see Kevin. Thanks, Davis. Millen, I see Kevin has raised his hand. Could you please that one?
Hey, Doug.
That is Kevin, right? Yeah, Kevin, how you doing, mate?
Doing well. I had a quick question. I'd asked you a little bit earlier. Whenever we're looking at something that is one of our long-term plays, but it's getting volume above average consistently on the daily, and we see a breakout day as far as above, key levels. Are you looking more at prints or volume to see that the phase is shifting to short-term money time?
Well, the volume would have to be of a magnitude that says all of the acquiring in the prior phase is ready to release. But if I see a lot higher volume and a continuation of acquiring, that's going to give me a far more confidence that this has far more value in store.
Got it. So you want to see basically short-term prints in that volume on days where it's going to phase transition.
Well, we're not looking at it just in days. We're looking at, remember, when you're doing options, when you're doing swings, you got to learn to zoom out.
Gotcha.
You've got to zoom out. So you can't look at it and say, look what I just saw here. It all has to be play by play. It all has to be continuation. It has to be a lot more extensive than what you'd see on a day trade. It's always about 100% on prints and volume and substance. So what is that money flow telling you? If the money flow is a continuation of higher volume, higher price point, but still massive acquiring. But for instance, look today, ACHR, it has higher volume in the last week, a lot higher than what it was doing for the previous maybe 3 weeks. But what has it shown us that it's only doing? What is it still doing?
Building.
Massive building. It hasn't changed its phase 2 approach yet, has it, Kevin?
No.
Not at all. Would you be surprised if that volume comes down and it starts building between 10 and 11 again? Would you be surprised?
Not at all.
There you go. You answered it yourself, my friend.
Gotcha.
Next question. Are there any more questions? Do not message me 10 minutes after this with a whole essay. Hence, I have classes. Ask me the questions now. Because I do like to, believe it or not, I do like to day trade. And I seem to be rather good at it. Derek, let's go.
Whenever you're doing research on a company long term, is the best strategy to listen to their earnings quarterly call, or would it be better to read like their 10K form? Or do you have any suggestions on where's the best place to find research long term for getting a lot of this information for an individual company?
Absolutely. Great question. So one of the things that I always go to is just go to the company website. You go to the company website, they're going to tell you about who their C-suite is. They're going to have their earnings reports, earnings calls, both quarterly and annually. The one thing that I've always done, and Donna can attest to this, is it's a very old school, always been taught for many, many years, is if they say they're going to do something in a quarterly, you want to know that they did it in the next quarterly. If they keep making promises and never fulfilling, is that a company that you can truly have faith in? So that's what your quarterlies are important for. Is I don't even care if they promise that it's going to be a bad quarter. You better then great. At least you told me ahead of time what to expect. That's going to build the trust and loyalty. So go to the website. You're going to get loads of information of the company website. You'll find lots of information on their company C-suite. Loads of news articles are typically on their website. All there under the investor relations, you'll find their earnings, quarterly and annual. But I also would go to, you can get a lot of good information on Yahoo Finance. You can go to Barron's. You can go to Bloomberg. You can go to CNBC. There's so many places that you can get a lot of great information. But listen to their earnings calls. Very, very important. I still listen to many earnings calls. I love reading earnings reports. Davis, do you ever use a fund's interest involvement in a stock as info as you do the C-suite personnel? Now, that's a very good question. But remember one thing. It's not always the smartest thing just to simply accept that, because at the end of the day, let's just be honest. What's the main goal of these institutions? Do they expect to hit a winner every single investment they make? Or do they invest in a bunch of great companies and expect a few of them to run away and overall take care of the average? That's how they really work. If you look at a lot of these companies and they invest in tech, they might invest in 10 tech companies, 8 or 9 will fail, but 1 will 100x, takes care of everything. And that's how it works. So what I do like to see, though, is a huge lineup of institutions who are now sitting with shares. That's important. Last thing you want to see is only a handful of institutions holding shares. If you see that a large portion of the outstanding shares are controlled by institutions, That should give you a lot more confidence. But what I also know about that is if they're sitting and holding a large amount of their shares, what's the beauty about the stock price? That it can happen with the right volume. We can get more range. We can get a lot more movement out of it because there's less float. Would you say the same for a large corporation investment, Microsoft into an AI company? Again, it does help. What's the beauty about Microsoft investing into an AI company, Davis? This is a whole complete different side thing. What does the AI company receive, which is far more valuable than the money? Knowledge, the team. Thank you, Milan. It's the knowledge. They get access to the people at Microsoft. That's the real value. So, if we looked at OKLO, for instance, which is a nuclear company, who's their CEO? Who's one of the, sorry, not this, I think he is the CEO, but who's part of that company? Who's in leadership of that company? Who's invested in that company? What's his name? Altman. Who is Altman, Kevin? The founder of OpenAI. Do you think that's important that the founder of OpenAI is on the board, leadership, and an investor in a nuclear reactor startup? Who thinks that's important? Who do you think is most likely got some contracts already lined up for OKLO? Do you think he has the network that as long as OKLO comes through what they promised, he can get the right contracts in place? Do you think he has the type of network for that? I would assume so. So, good question turned into some more good nuggets there as well. Okay, last question, and we are done with class number 4. Do I have another question? Okay, thank you all. Been a lovely session. I hope you guys learned a lot. And I look forward to speaking to you all tomorrow at 11 o'clock. Have a wonderful afternoon.